One of my favorite dividend growth companies, Visa, just released their quarterly earnings and they were impeccable in my opinion. So what we're going to do in this video is look at Visa's latest quarterly earnings, take a deep dive into their financial statements, and then we'll look at the guidance that Visa has provided to us for the upcoming fiscal 2024 year. So if that's some content you'd be interested in listening to, I encourage you to watch the video. And if you like the content, give it a thumbs up. So without further ado, let's go and dive right into Visa. So Visa currently is in the payment processing sector of my portfolio, and that's about 10% of my total YouTube dividend growth portfolio. So if you look at Visa here specifically, it makes up about 4.4% of this total YouTube dividend growth portfolio. Now, if we look at my Visa holding specifically, we can see that Visa, I'm currently up about 16.2%, and I have an average cost per share of $197. And like I said, it makes up about 4.45% of my total YouTube dividend growth portfolio. Now let's go and look at Visa's most recent earnings. So their fiscal fourth quarter results. So again, this was the last quarter of their fiscal 2023 year. They had GAAP net income of $4.7 billion or $2.27 per share. And then their net revenues were $8.6 billion, an increase of 11% or 10% on a constant dollar basis. So great net revenue growth here from this quarter compared to the previous quarter in the previous year. Now their fiscal full year results. So this is comparing the 2023 year to the 2022 year. They had net income of $17.3 billion or $8.28 per share and net revenues of $32.7 billion. This represented an increase of 11% or 13% on a constant dollar basis here. Again, great growth. So other highlights, they note that their fourth quarter payments volume grew and the processed transaction grew. They were stable while cross-border volume growth remained strong. They had major shareholder rewards here. They had share repurchases and dividends. So again, share repurchases of $5 billion and dividends of $16.1 billion. So again, great shareholder return here in the form of share repurchases and dividends. The board of directors increased Visa's quarterly cash dividend by a whopping 16% to roughly 52 cents per share and authorized a new 25 billion multi-year share repurchase program. That is music to my ears. Visa, one of these great high dividend growth companies, coming in and raising that dividend by a nice 16%, and then also introducing a large $25 billion multi-year share repurchase program. Great here. Income statement summary. So again, they give us a snippet of their income statement and then also some commentary from their CEO, Ryan McKerney. So let's look at that. So he states they finished their fiscal year strongly and with strong performance as net revenues grew 11% and GAAP earnings per share grew a whopping 22%. Throughout the year, they've seen resilient consumer spending, ongoing recovery of cross-border travel spend versus the 2019 year, and continued growth across new flows and value-added service businesses. As they enter the new fiscal 2024 year, they are confident in their ability to deliver against a backdrop of geopolitical and economic uncertainty. They're also very opportunistic about Visa's future in payments. So again, in the economy that we live through, Visa is still communicating that they believe they will have strong growth drivers in the short-term and long-term future. So the income statement summary here, again, we'll be looking at the most recent quarter, but like we mentioned, net revenues grew to $8.6 billion and it was 11% year over year. GAAP net income grew ahead a whopping 19% to $4.7 billion, and GAAP earnings per share grew at that 22%, which was $2.27 per share. So their key business drivers here, again, being their payment volumes, cross-border volumes, and processed transactions. Those all had very nice growth rates coming in at 9%, 18%, 16%, and 10% respectively. Okay, let's go and look at their most recent income statement or statement of operations as it is also called. So again, we're looking at the 3 months ended September 30th, 2023 compared to the 3 months ended for the previous year in that quarter, for the same quarter in 2022. So as we can see here, net revenues grew to 8.6 billion compared to 7.7 billion in the previous year. And the total operating costs were 3 billion this year in this quarter compared to 2.7 billion. So nice uptick here in revenue, roughly another $1 billion here. And then they just had a marginal increase on those operating expenses, roughly $300 million. And again, as we can see, a lot of that was in personnel here and a little bit in general and administrative as well. And they also set aside some money for any litigation provisions that they may know or any pending. Now we go down to the operating income, nice $5.5 billion here. And then when we take out the taxes and the interest expenses, we get to a nice net income of $4.6 billion, up about 700 million from the previous quarter in the previous year. So great growth here, in my opinion. All right, so let's look at the cash flow statement. So here we have their net income just dropping down here, 17 billion. And again, this is for the full year here, the cash flow. We're looking at the cash flow on a full year basis. So 17 billion here in cash. And then you add back any non-cash items such as share-based compensation, any deferred income taxes, and the large one here, those incentives that they provide to clients in order to get them to use the cards. And then you can add your changes in your balance sheet or decrease your changes in your balance sheet here. And that gives you a whopping $20 billion here, or $20.8 billion of net cash from their operations. Now, when we scroll down and look at their investing activities, we can see that they only spend about $2 billion on investing in the business. Again, just there's not really a lot of things that they need in order to operate this business. It's a very scalable business, very low capex or capital expenditures required to run this business. So again, they only invested about $2 billion here in terms of capex. So that leaves them with about $18 billion left over. And what do they do with that? They reward these shareholders. So they repurchased $12 billion of stock. Again, I'll say that again. They repurchased $12 billion of common stock for cancellation. They paid back some debt. They issued almost $3.8 billion in dividends. And that was basically the cash flow for the year. So again, as a company, Visa using the cash that they generate from operations to invest back into the business for growth and reward shareholders. This is an ideal use of cash, in my opinion, for a company this scalable as Visa. So great cash flow here, in my opinion. Great capital allocation strategy. So let's look at the balance sheet here as well. So us as investors, we want to make sure that the balance sheet here is clean. It's very easy to forecast how their balance sheet will perform or look in the future, because we want a company with strong financial basis in order to allow them to keep operating. It's not all about the income statement. You can have a great quarter or a great couple of years, but if you're not able to manage that capital effectively, keep your liabilities in check, keep your assets growing over time, then the company can be in trouble in the future. So we're going to look at the balance sheet here again at the end of this quarter. So cash and cash equivalents here, this is stating the total current assets. And again, if you are not familiar with this, total current assets are assets really that you can convert within 1 year. And then total assets, or these other long-term assets here, are assets that would take a longer time to convert. Again, this, by the nature of the name, should be suggestive in that nature. So cash and cash equivalents, $16 billion here. Now they have set aside about $1.8 billion for any litigation, and then investment securities of basically $4 billion. So they got about $20 billion of usable cash here. They have some AR, and they have some collateral, as well as some other prepaid expenses. And then again, the majority of these other long-term assets are put into intangible assets and goodwill, and a couple $1 billion in PP&E. Now, when you look at the liabilities here, not really any significant liabilities. Even their current maturities of debt, they do not have any current debt. So they have $5 billion of accrued liabilities, $8 billion of client incentives, and then just the regular accounts payable and customer collateral here. So not a lot of liabilities here, which is great. Now they do have long-term debt, which is about $20 billion. So that cash balance that they have right here is equivalent to their debt. So they can easily pay off this long-term debt if they wanted to at any time. They have the cash available to do so. So they are basically in a neutral or almost positive cash position. And again, like we saw on their cash flow statement, if we go back, they basically generate the amount of debt that they have in one year, or again in this 1 year. So in this 1 year, they can pay down that debt if they wanted to. So great cash flow generation by Visa. And again, I look at that debt as no problem. This balance sheet, in my opinion, is very clean. Now let's go and look at their guidance. So they guided for the fiscal full year 2024. And what they stated is their annual net revenues will grow in the high single digit to low double digit range. So again, we did see that they grew at 11% this past year. We saw that this quarter. So when they're guiding to this and they're communicating it to us investors, I have no reason to believe that they can't do that. I would imagine this high single digit to low double digit range being anywhere from 9 to 12 or 13%. So again, guiding on that annual net revenue growth. Now again, revenues are not the end all and be all. We need to look at how they're controlling their expenses. Expenses cannot grow faster than revenues because then you'll get negative net income or undesirable net income. Now they've guided for their annual operating expense growth to basically be flat here. And then on the non-GAAP basis, they might have it in the high single digits. So again, similar to how it was this previous year. So that is great. And their annual diluted common stock earnings per share growth, so EPS, they're guiding in the high teens on a GAAP nominal dollar basis and on a non-GAAP nominal dollar basis in the low teens. So what I'm envisioning here is, maybe 17, 18% EPS growth on a GAAP basis, and on a non-GAAP basis, maybe anywhere from 12 to 13% here. So again, great guidance here by Visa. I am very optimistic about their 2024 fiscal outlook. So when we look at Visa, and again, I'm using Seeking Alpha here to look at Visa. If you would like, and I have a special offer on my channel, you can sign up for Seeking Alpha, get a couple dollars off and try it out. And I'll leave a link for that in the description below, and feel free to check that out. And just please note, if you do sign up, I do get a referral fee or a compensation through that, or a commission. So let's look at Visa under the ticker symbol V. Traded at $229.27 as of close on October the 27th. 6 months, it's basically flat. Stock year to date, it's up about 10.55%. Over the past year, it's up about 12.23%. If we go on a longer time frame, 5 years, it's up 70.68%. And over the past 10 years, up a whopping 362.31%. So great stock appreciation here, in my opinion. Now, if we look at the yield here, there's nothing to write home about a 0.91% dividend yield. And then if we look at the price to earnings on a forward basis, it's at a 23.23. So again, not the cheapest stock here on a price to earnings basis in terms of valuation. But what we do want to look at is that dividend. So again, Visa mentioned they raised their dividend. They're going to raise it by 16%. So as we look at here, Seeking Alpha, they give Visa a dividend safety of A-. They give it a dividend growth rate of A+. Dividend yield here, again, we saw the yield is low at that low 0.91%. So they've given it an F. Dividend consistency, B+ here. That's a track record for paying dividends. Look at the summary, 0.91% on the dividend yield like we saw. It's about $2.08 on the annual payout. Payout ratio is a nice 21.35%. So super low payout ratio. That allows for the future growth of that dividend without putting stress on Visa's financial operations. 5-year growth rate, 16.89%. So again, they just grew the dividend again, at 16%. So coming right in line with that 5-year growth rate, or pretty close. So great growth rate here, in my opinion. And they've been growing this dividend for 14 years. So let's look at the dividend growth. So we can see here Visa's 3-year dividend growth rate coming in at 14.47%, the 5-year at that 16.89%, and the 10-year at an even higher rate of 18.49%. So Visa has been growing their dividend at very, very high rates, and they are able to do so because their business model is very scalable and they grow up their dividends in line with their growth as a company. Now, forecasting for the future, even though they raised their dividend right now by 16%, I was actually surprised. I was expecting a lower percentage, like 13 or 12%. But again, they could be growing this dividend at those rates, and anything here is feasible. Now we're going to go look at the dividend safety. So like we saw, the payout ratio was 21%. Now if we look at the payout ratio on a cash basis, it's even lower at 19%. So again, this payout ratio here, in my opinion, is very, very good. It's very low. And I believe that Visa will be able to pay out dividends for the foreseeable future over a long time period. And again, here you can see the payout ratio here. Nice 21.35%. So what are analysts saying about Visa? Now, are they thinking that it's going to go up? Is it going to go down? Like, what are they rating it as? So I always like to look at Wall Street. Again, it's not really anything I go by when I look at in terms of buying, or it's just one type of analysis or viewpoint. But again, the analysts here, 22 saying it's a strong buy, 9 saying it's a buy, 7 saying it's a hold. If we scroll down, we can look at their price targets. So an average price target of $275.31 could result in 20.08% upside. And again, you can see the high estimates here at 325, the low estimates at 220, and the average being $275.31. So that was Visa. And again, Visa is one of my core holdings here at 4.45%. It is a great growth stock, great dividend growth stock here in my portfolio. Again, it doesn't really provide much current income, but that yield on cost that you get by investing in Visa is great. They have continued to grow their dividend over time at very, very high rates. Great amounts of cash flow. The capital management here, in my opinion, is one of the best I've ever seen. They use a lot of that cash flow just to reward shareholders in the form of buybacks, cancellations, and dividend growth. So that was Visa. If you had any comments or questions, or you liked the video, please leave me a comment in the comment section, and I will try to get back to you. Now, if you liked the video, again, leave a thumbs up and subscribe to the channel. I do this totally for free, and the whole point of my channel is to share my investing knowledge with you great folks here on YouTube. So thanks again, and I hope you have a great day. Bye. Please note, I'm not a financial advisor by any means. Always do your own due diligence when investing. Investing is inherently risky, and you may lose money. I am not responsible for any investing decisions or losses you may incur. Thank you, and have a great day.